Welcome back. Welcome back to another episode of Take Profit Tuesdays. And you're with your host, founder of Vonnie FX, Levon Stewart. Alright, so as you can already tell by the title, we got a couple things we gotta talk about. Might be a relatively long stream, but there's a lot of points I want to make, a lot of things I want to pass along. Maybe some advice, not financial. So with that being said, being that's not financial. Again, guys, this is not financial advice. If you are, willing to invest in the markets, make money in the markets, you need to seek a professional as far as someone who you could trust your money, potentially, who's licensed in this kind of industries, who could manage your money for you. Kind of does the same thing what we're kind of doing, at a big corporate wide level. They charge fees, so on and so forth. Give you guarantees, make up the package look nice, so you could talk about with your friends. That's the kind of person you want to go to, and put your money with them so they can manage your money for you. They go to a presentation, so on and so forth. But here in Vaughn, we kind of teach you and educate you how to invest and make your own money and be confident while you're investing, right? Now, and them, we are, gonna bump into fluctuations in the market, nonetheless. But again, put your money to a broker, institution, advisor, wealth money manager, so on and so forth. Or if you want to learn, follow us and I'll teach you. And again, we do offer other products, signal service, got the crypto account management as well as the teachings, and yeah, that's kind of the whole spiel of what we're doing. But again, let's get into today's episode. Again, if you're joining now in the chat in the stream, make sure you like the video, comment in, throw a comment. Let's go. So I want to emphasize that I believe a couple months ago, actually, if you watch episode 5 of TP Tuesdays, we discussed how around February, the Feds were planning on hiking interest rates gradually to combat the inflation, right? Gas is getting higher. The standard of living is getting higher. Nothing is going down. The war is still going on, by the way. I know they really haven't been talking about on the news, but hey, people are still dying, right? So, while this happened, the Feds came up with a solution because, again, the inflation has been occurring since almost, I believe, last year due to the stimulus package. And then gas prices started rising up, so on and so forth. And due to the war now, it caused it to go up even higher. So now, what the Feds are going to think of doing is, all right, due to the stimulus, we need to stimulate the economy. People weren't working. People are not going out. The clubs are shut down. The restaurants are closed. How can we get money to be circulated in the economy? Let's give them more money. And guess what? It worked. Congratulations. It worked so well, as a matter of fact, that it put us in inflation, right? All this money in the economy, right? So now you as a merchant, as I explained to you in previous videos, you need to capitalize on that. If your neighbor next door is selling pizzas at $200 and you're selling at $100, and people are buying his pizzas as much as they're buying yours, you're gonna match because there's so much money in the market. So again, you could thank Joe Biden, you could thank Trump. You could thank all of them. Round of applause, right? But now here's the next issue. So the purpose for those funds, yes, was to buy income, pay debt, so on and so forth. It was not used to be as discretionary money, or yeah, discretionary money, money that you could spend, for meaning. I wouldn't say meaningless, um, for lack of words, of luxury items, right? So what did people start to do? You got the PPP loan. You got the what other the grants that the government was giving. Um, and again, the stimulus. So you have all this money in the economy, and the only thing, again, you put more money in the economy, it could only cause prices and goods to go up. People are doing scams. People are doing this, that, and the third. They're impacting the economy in such great magnitude that it, again, it not just only affects us, but it affects almost everyone. And this is the consequence that we have to deal with. So again, the job of the Feds is to combat this inflation. And then again, again, judging by the title, guys, they're pretty consistent in what their mission is, and I believe that they're gonna continue to keep raising the hikes. Yes, there's an article we're gonna go over a little bit more in detail. Let me make sure I have the right one pulled up. I think I had a double. Yeah, hold on 1 second, guys. Again, guys, if you're just not joining in, make sure you like the video. Make sure you like the video. Give me 1 second. I really want, like I said, guys, I really want to, we got to talk about this, because this is, again, not only just affecting you and I, but it's affecting a lot of people. And then, frankly enough, um, that's not cool. That is not cool at all. Just give me 1 second, guys. Hang tight. We do this live, guys. We do this live. I had it all prepared already. It's just, thanks to the super fast Wi-Fi and, the great editing skills, and I got such a great team, we still make mistakes, It happens. We can't really plan everything out nowadays to the T, but hey, I'm here. We're together. We're making content, and yeah, we're doing big things. We're doing big things. So let me see if I can pull this other article up. Get it ready for what we're going to talk about. Let's see if it's this one. Yeah, yep. This is it. Hope you guys are ready for this, man. Hope you guys are ready, man. I hope you guys are ready. All right, so next topic on the agenda. I want to talk about, as you can already tell by the price tag, I don't know if you guys already know. Again, if you're just not hopping into this for the first time on Take Profit Tuesdays, we're building a portfolio together as a team. Again, you could jump into these opportunities as well, if you would like. Again, this is not financial advice. Again, the video, like I said, seek your advisor. We're running one play, the index S&P 500. Not going into all those details. Do your own research as to what it is. But we're running plays. The goal is to eventually go to, I don't know, 1,000, 2,000, 3, 4, 5. We'll see. The ultimate goal is to actually have the enough to have like options account. And with these options now, I want to play a long-term play, and I have to do intensive research. And there might be a lot of losers. Or might be a lot of winners. I don't know. Let's see. We're gonna keep growing this account because, again, guys, we're doing this live, and we're transparent too. So I'll be transparent as much as I think I put 25 at last top price tag. So again, if you're keeping track, you already know how much is already invested. And I'm proud of myself. This is the lowest I've bought thus far. Clap it up. Clap it up. And you're like, Lee, oh, why are you gonna buy when price is going down? Hold up. The reason why you would want to buy it, or as I should say, as we're dollar cost averaging it, because this is what we're doing. Now you can have good dollar dollar cost averaging, and you can have bad dollar cost averaging. And when you're doing the bad one now, just to start off, you're buying at high points when price is the most highest. So as price is climbing up, you're buying at the most highs. You're paying the most price for it, right? But now if you're buying on the dips, the lows, let's say COVID, when you got into COVID at that big dip, you're making bank. You're coming out on top. Price has to eventually go up. So, all right, let's just jump into the reason why I did it. So, as you see again from previous videos, and again, guys, make sure you watch the video so you can understand why I break it down the way I do. All right, I'm not gonna tell you from step one. We passed that step. Watch the past videos, get educated. If not, join the teachings, the one-on-ones, the signals. We talked about how, price going to move three ways: go up, go down. You can just continue moving sideways. So up at this point right here, I really thought I was going to complete this W pattern and make new highs. Life happens. There's a lot. Honestly, there's a lot of uncertainty going on. Crypto just dropped the night before market opened, so which I'll talk about in a couple minutes. And it just, it had to affect it, which is fun. It's cool. I had money saved up already to get into another buy position. This is what we do. Again, guys, the four pillars. You gotta have the capital, you gotta have the strategy, the risk management, and the psychology. Again, this is what we do in our teachings. Shoot us a message if you're interested, and let's get to work. But yeah, we got into a dip. We bought at 3760.8, and it's the lowest I've bought it thus far. And was it a lot I bought? No, I did not buy a lot, but I got some shares and I got into a decent position. And guess what, guys? If it continues to drop lower and lower and lower, or if it moves a little bit sideways, I'm definitely gonna buy some more. I'm gonna buy when it's at its lowest. So now, let's see if these fibs. Let's see if it's in the golden zone for retracement. Alright, let's use this base right there. Maybe we might see something. It's in a lot of it's kind of in that golden zone, don't you think? Kind of buffering, right? So honestly, guys, if it breaks the let's see 3,592.8, possibly a serious bear market, probably for the rest of the year due to the inflation, but we'll see. I can't tell the future. I can only play as I see it, and right now I'm pretty satisfied as far as price getting lower. I'm not really scared. Super excited. I'm just playing strategically to my strategy. Again, that's pillar 3, right? No, lied. That's pillar 2. So you gotta play those pillars, man. Pillar 1 was having that capital ready to enter buy position. Pillar 2 was already a strategy was already in play as far as how low prices had to be before I bought it. Risk management, again, I'm not risking that much. Like I said, I had the capital to do it. And psychology, we're just gonna play it as we see it. So, next thing I want to talk about real quickly is Bitcoin. And let's see if I can pull up another chart. I don't want to use this chart. This chart is too clean. That's the best chart you're gonna see. Let's see what we got. Again, if you're coming in, like the video, subscribe, support the channel. Then we do these videos weekly to educate the masses, teach them how to invest, and earn money passively. Cause why not? I see this chart's clean. Is that the same chart? It's the damn same chart. Yeah. All right. So let's use this chart. So we we've come to new grounds. Come to new grounds. Come to new grounds. So this right here, guys, this was when everything was good and happy. Oh, Bitcoin, crypto's doing well. Everything's doing handy dandy great, and then price just keeps on falling, selling off. People are saying, neckline, if it breaks this neckline right here that I have, right here to show you, could possibly hit like the 15s, 18s, 21s. It's around 21 right now, or even lower. So it's just, again, guys, I don't really want to talk too much of it. I just want to let you know that it's a good time to possibly buy if you're trying to get into this long term. I have a bunch of Bitcoin and other crypto assets that I'm holding long term, like a year, 2, 3, 4, 5. We'll see how it plays out. I got a couple strategies. I kind of want to play a couple staking strategies. And again, guys, it's something we teach in the group as well, kind of privately. But yeah, I just want to highlight that before we get into these articles, man, because this is exciting for me. People are going crazy, like, oh my god, my Bitcoin dropped, because they bought the highs. They got them like, oh, I gotta get them before it keeps going higher, higher, and the excitement gets them. Nah, me, I'm genuinely content to buy some more now, because I gotta get that capital, that pillar one ready. You see what I'm saying? Because I'm gonna get a lot more Bitcoin for cheap now for long term plays. Anyways, we don't want to get too much into crypto, man. We probably possibly got to make a whole nother segment, talk about some plays with cryptos and stuff. Or if you guys want to hear it, I just want to talk about as far as stocks and forex plays and things like that. As far as forex now, I did get into another loss. That's okay. We're transparent. We're transparent, guys. You know what it is? I've been the feds, man. I've been the feds. Just joking. No, this was honestly bad timing, and I take responsibility of it too. And the thing is, I want you guys to understand that this can not only happen to you, but this happens to a lot of people. This is why it's so important to be on point with these 4 pillars, man. I really want to emphasize how important it is, because you could have been a person. Oh, the Mertile Chicago exchange is telling me that there's a lot of long term positions, especially the institutional buyers. The technical analysis is aligning correctly. It's on the Fibonacci. It's on the support zone. There's news articles saying, and then the next day it goes opposite. You put all your money into it, and it went opposite. You were so convicted in your analysis, your fundamentals, your this, that, and the third, and it went opposite. What work do you have to show for that? A negative account, a blown account that hit margin called. That has nothing to show with it. So again, guys, this is why it's so important to be on point with these 4 pillars, and this is why I'm so comfortable, to say the last, expose myself on these losses. I don't like showing off my wins as well. Because again, guys, we're transparent. We teach this. I've taken so many losses, but guess what? I still have a lot of money in my trading account. Because I'm risking 1%, 0.5%, 2, 3, and then when I make profit now, it's like 3, 5%, and all that losses are covered. So my break even a lot of times, if not profitable, and you just play it long term, whatever profit you have, take out the profits, and then play the plays again, and you do this passively, and again you do this over and over until you build your own channel, you make a give it a name, call it Vonnie FX, and so on and so forth. All right, so now that we talked about that position I took that went opposite, turned the other way. Let's talk about some news. But you guys are excited, right? Yeah, and if you're coming in, if you're watching it for the first time, like it. This is your host, Lee. And yeah, support the channel, subscribe, show some love, and let's keep building, guys. Alright, let's go to this article if it loads up correctly. So the title of this article, a 75 basis point hike. Guys, that's like 0.75%. Here are 3 years the Fed can sound more hawkish this week. And again, we're not going to read all of it. We're just going to highlight certain key points. Alright, this is very fundamental. The size of Wednesday's rate hike. Over the past 6 weeks, Fed officials have consolidated around a plan to hike the central bank's policy rate by a half a percentage point at both the Fed's meeting this week and next week's meeting at the end of July. Despite the high CPI readings, most economists thought this was the most likely outcome for Wednesday until the Wall Street Journal published an article Monday afternoon that said Fed officials will consider surprising the meeting with larger than expected 0.75 percentage point interest rate increase. I hope you guys are reading that, man. I hope that didn't fall over your heads. Soon after the article was published, a spate of prominent economists, including the Goldman Sachs and JP Morgan, revised their forecast to include a 0.75 percentage point hike on Wednesday, which is tomorrow, over the economists who are sticking with the half percentage point hike. A 75 basis point hike would be the largest rate increase in nearly 30 years. Let that sink in. Let that sink in. This rate hike would be so big. It's older than me. They haven't rated it so high since way before I was born. So, let me see if there's something else we could grab from this. Let's see. So this is interesting. The Chairman Powell, Jerome, is viewing on how much more tightening will be needed. And they talk, and again, guys, if you watch my previous video, make sure you watch it so you can at least understand how this was kind of foreseen months in advance. This is something they've discussed months in advance. This was expected months in advance. So to me, this is not surprising. It's just like, geez, how high you guys gonna keep increasing these rates? Because again, they need to cut this. They need to bring this inflation down. The Americans are happy. Biden's approval ratings aren't good, right? So what do we got to do, Feds? Bring the rates down. Like, let's bring this inflation down. Let's break the heights up. Get this money out the economy. Like, let's go. But anyways, let's see what he got to say. In May, Powell said the Fed would not hesitate to bring rates above neutral into restrictive territory. I don't know what that means. I don't know what is restrictive, but let's see. He is likely to double down on that commitment this week. Let's see. Powell undoubtedly will sound even more hawkish at his press conference on Wednesday that he has any time this year. Yeah, because they're upset, man. Said Yarden, whatever his name is, president of the Research Incorporated. On the other hand, Powell is likely to contend that the Fed can't increase the supplies of food and energy to bring prices down. Increase the supplies of food and energy. It's hard to when prices are so high. You know what I'm saying? But anyways, I mean, yeah, the more supplies you have, the less price could be, or more attractive pricing for customers, I would say. In effect, he will concede that the one and only toolkit in the Fed's toolbox for combating inflation is to raise interest rates to levels that depress demand for all goods and services, even if they increase the risk of recession. Bruh, can y'all read this, man? Y'all reading this, man? This is crazy. So let's dissect that now. He literally just said that he's comfortable that there's so much pressure online right now to bring this inflation down. Because again, I looked at the DXY. And yes, the rates did bring it down a little bit, but hey, it's it's bringing everything else back up. But they're content with having a recession possibly happening in the next couple months to a year, guys. So that's profound, and they're trying to make the price of goods and services go down. So the only thing you could do is make things more attractive by taking the money out the supply. But anyways, let's get into this one. Talks a little bit about the S&P and what's going on. Shout outs to Emily McCormick. Shout outs to her. Just nice articles. Um, let's see. Just gonna nitpick a couple things. Um, yeah, this is definitely what we need to see. This is definitely what we need to see. So I can bring this. It's kind of. Yeah, there we go. There we go. Can y'all see it? Can y'all see it? Again, if you're coming in, like the video for coming in. All right. So for broader markets, investors nervously looked ahead the Fed Reserve's latest policy setting meeting later this week, with the rate decision set for Wednesday. Up until Friday, higher than expected customer CPI, which is the customer price index, traders widely believe that the meeting would set the stage for another half-point rate hike by the central bank, bringing the target range rate to increase to 1.25, or the N 1.5. However, after the last week's data showed an unexpected pickup in inflation, which we talked about, I saw on DXY. You might look at it. To the fresh 40-year high of 8.6 in May, investors have raised their bets on an even bigger move by the Fed. So yeah, that's a lot of pressure, man. There's a lot of pressure. Oh, speaking of pressure, inflation puts pressure on Powell. What is to know this week, guys? They're on it, man. They're really talking about it. All right, so this one's real quickly. Now we might end the stream because we're already at 30 minutes going. And again, guys, if you like the video so far, make sure comment, subscribe. Let's pick something out of here. I think I see something. Yep, this one. I like this. I like this. I like these actually. Alright, so it says the Fed's price stability resolve is going to be really tested now. Principal Global Investor Chief Strategist Seema Shah said in a note, policy rates will need to be relentlessly aggressive until inflation starts to fade, even if the economy is struggling. So now even he's suggesting a recession. You see, here's the thing, guys. The ones who are mostly affected by these such of things is the bottom line, which is the consumers. And again, if you haven't watched my video, I explained already how the rates affect us, not only just cost of goods and services, but the rate of borrowing money. But let's continue. We're gonna end the stream soon. This is relentlessly aggressive stance could include raising rates by 0.75 on a Wednesday. A move economics at Barclays said Friday is now their baseline expectation. Historically, the U.S. central banks has avoided surprising markets, say going up 75 basis points when it's not priced in. Barclays economists led by Jonathan Millar said in a note to clients published on Friday, but next week we feel it's likely to be an expectation. So yeah, I feel like that's profound breaking news in my opinion. There's a lot of pressure on Jerome, and to be honest, I wouldn't be surprised if they do a full 100 basis points, a full percent. I would not be surprised. I would not be surprised. Look at the DXY. It's like, I think this was like the first hike. Came out a little bit, but it came right back up. Inflation just came right back up. But yeah, man, this is profound. Really interesting topic to talk about. This is definitely a long stream. I told you guys it's gonna be a long stream. Again, if you're just not coming in, make sure you like the video, subscribe, comment. I'm gonna finish off here. Just again, final thoughts. Just be prepared. Make sure you save. Make sure you follow the 4 pillars. Again, if you're seeking from education, maybe a signal service, maybe advice, but not financial. Because again, guys, if you need financial advice, seek an advisor, or a broker. Um, yeah, definitely do that. And yeah, I'll catch you guys in the next video. See you guys at the top. Peace.